Before you hear the first whistle, a tax meter starts running. Not for the team, not for the league, for the player. Every time a star athlete steps onto the field in another state, they are not just playing a game. They are triggering a tax bill, not by their home state, but by the state they just walked into. It is called the Jock Tax, and it might be the strangest tax in America. Imagine getting taxed just for showing up to work. Not by your boss's state, not by your home state, but by every state you briefly step into. That is real life for professional athletes, and it is all because of something called the Jock Tax. Welcome back to Tax Hack Pro, where we expose the financial rules most people never hear about so you do not get blindsided by the system. If you want to understand the tax rules that quietly shape your paycheck, make sure you subscribe to Tax Hack Pro so you never miss what really matters. Today we are breaking down what the Jock Tax is, why it exists, who it really targets, and why this tax could affect regular workers next. The Jock Tax is a special income tax rule. If you earn money while working in a state, even for one day, that state claims the right to tax that income. States do not have the resources to track millions of traveling workers, so instead they go after people who are highly paid, highly visible, and have public schedules. That means professional athletes. Their game schedules are public, their salaries are public, and their locations are easy to track. So when a basketball player plays one game in California, California taxes part of that player's salary. When the same player plays in New York, New York takes its cut. One season, one salary, but taxed by 15, 20, even 25 different states and cities. The Jock Tax did not start with athletes. It started with revenge. In the early 1990s, California decided to tax visiting NBA players who played games in Los Angeles. Illinois did not like that, so Illinois said, fine, we will tax California players when they play here. Other states followed. Soon it became a quiet agreement. If your athletes come here, we tax them. If our athletes go there, you tax them. And just like that, the Jock Tax became national policy without ever being voted on by Congress. Here is where it gets crazy. States do not just say you played here once, pay this much. They use something called a duty days formula. Let us say an NBA player makes $10 million a year. If they have 200 duty days in a season, and 10 of those days are in California, California says 10 divided by 200 equals 5%, so they tax 5% of that $10 million. That is $500,000 subject to California taxes. Now repeat that for New York, Illinois, Texas, Florida, Toronto, everywhere they play. Some cities even add their own taxes on top. So one salary gets sliced into pieces and taxed over and over again. Not all states are equal. Some states have no income tax, like Texas, Florida, Nevada, and Tennessee. If you play there, you keep more of your money. But if you play in California, New York, New Jersey, or Minnesota, you can lose nearly half your income to taxes. That is why athletes care deeply about where they play away games, not just where they are signed. Michael Jordan once paid taxes to more than 15 states in one season. LeBron James has paid millions in Jock taxes across his career. One NFL player said he paid over $1 million a year just in state and city taxes from road games. Some athletes even hire full-time tax teams just to track where they worked on which day. From a government perspective, this tax is perfect. High earners, easy to track, hard to fight, politically safe to target. Most voters do not care if millionaires pay more, so states quietly raise billions without ever raising taxes on regular voters. It is one of the most efficient revenue systems in the country. You might think I am not an athlete, why should I care? Because the idea behind the Jock Tax is expanding. Remote workers, travel nurses, consultants, truck drivers, touring musicians. More people now work across state lines, and states are watching. Some states already try to tax business travelers, salespeople, contractors, and temporary workers. The athlete system proves something dangerous. If they can track you, they can tax you. Technology is making tracking easier every year. In the future, your phone, car, badge, or login could prove where you worked. States do not need guesswork anymore. If the Jock Tax worked for athletes, why would they not copy it for everyone else? That is the real lesson here. Athletes are just the test group. Athletes do not just accept this blindly. They use tax strategists, residency planning, game day structuring, trusts, and entities. Some even prefer teams in no-tax states because every away game hurts less when home games do not. But average workers do not get those options, which is why understanding this system matters. The Jock Tax shows how flexible tax law really is. It shows that if income moves, tax follows. It also proves the wealthy are used as experiments first, then the system spreads downward. What starts with athletes today could hit remote workers tomorrow. So next time you watch a big game, remember that player is not just fighting the other team. They are fighting 20 tax departments at the same time. And the scariest part is the same idea could come for regular workers next. That is why you watch Tax Hack Pro. And if you want to stay ahead of the rules that shape your money, subscribe to Tax Hack Pro. We do not follow headlines, we follow the money. Subscribe now, because the tax rules you do not know are the ones that cost you the most.